Hello everyone, I hope you guys are having a good day. I'm just going to be doing a bit of an update here on the markets. It's Wednesday, October 18, Whipsaw Wednesday. It's option expiration week, and we just got earnings from Tesla, Netflix, and a couple other companies. I'm going to go over them just very quickly. But first, let's just cover the S&P. So again, not too surprised that we got another down day here in the markets. And right now is actually followed with some decent volume. We actually closed lower below these previous lows. So we'll have to see how the markets open tomorrow, how the markets react. But overall, it was a pretty significant down day again. A lot of people are thinking this is bullish consolidation for another leg higher. To that, I don't really see that happening. Something like this, and 1, 2, 3, 4, 5. Although it's possible, but I don't see this happening right now, given the geopolitical conditions. We just got earnings from Tesla, and it's actually down about 4% at the moment as we speak. And we did get Netflix actually up over 12% in the after hours, but again, it's a significantly smaller company than Tesla, and it has significant less of an impact than Tesla. But right now, I'm just watching the news. Everyone seems to be focusing on how bullish this is going to be tomorrow for the markets for Netflix. That when we open tomorrow, they're expecting a huge gap up in the SPY and the Qs because we're already up in the after hours. But we'll see how everything goes tomorrow. My expectation is that we're going to get more follow through, and that's going to probably you could kind of tell how the market's positioned, and they've definitely bought the dip here, and they do not want it to go lower, and they've been buying the dip on every single dip that we've been getting. And it's kind of worrying because right now no one seems to be prepared for more downside. But I do believe that this wave 4, if anything, is going to extend lower. But this might not even be a wave 4. And what it could start is to potentially become some sort of a. I'll just delete. I'll just get another chart here to potentially show you guys what I'm seeing. What it could be getting to is a potential maybe 1-2 setup and a 1-2-3 setup. So you might be getting a 1, 2, 3, 4, and then you're going to go down in your fifth wave, right? So you might come back down like so, which would be extremely bearish, and this would be part of a larger wave. So this might just be your first wave down, right? And then you're going to come back up in a wave 2, 3, 4, and then a 5. So again, depending on how the market plays out. This is still my primary count, which is an ABC correction, like so, A, B, and then we're gonna come back down in a significant C wave. And no, I don't think anyone's ready for this right now. All I hear still is all-time highs. All-time highs are coming. Rates don't matter. Nothing matters. It's just buy, right? So it's pretty worrisome to see what the news is saying, what the market's doing. Now, we have just gotten earnings from Tesla, so we could take a look at it right now. We'll take a look at market cipher in just a moment. So you can see Tesla's down about 3.82% now. Obviously, this is just after hours. What matters is how it opens tomorrow. And we were actually up just a little bit, about 2% in the after hours before Elon Musk came out and talked about how it's going to be pretty difficult to ramp up the production of the Cybertruck, I believe. So that's going to be, that's not bullish news that you want to hear. And on top of that, they missed on EPS, and they missed on revenue as well by a pretty big amount as well, $837 million. Netflix, however, very good earnings. They beat on revenue, and they beat on EPS, earnings per share. They're actually up 12% in the after hours. They're probably going to run into some pretty big resistance here, right around 400 to. My best guess is like they're already at resistance around 388. You're going to come back up and most likely retest this trend line as resistance. But 12% gap up is going to be pretty big. We'll have to see if it's just pure selling after that, because if it turns out that it's a big gap up and it's only selling afterwards, then that's pretty bearish, something like we've seen in NVIDIA. If you guys have been following NVIDIA, we had that earnings report. Massive gap up at the open the next day, right? We gapped up about 6-7%, and then it was non-stop selling until the close, right? So it fell 6% in that single day, followed by significant volume as well. So that pretty much marked the top for NVIDIA. And now Nvidia has been getting slapped around the last couple of days, and our puts are up significantly. So congrats to everyone that's following my calls. You guys are doing pretty good. But right now, just looking at market cipher and the S&P 500. Okay, so right now there's the bullish account, which means that we could potentially get another fifth wave higher. But I think we've already completed our 5 waves up, or not even a 5 wave up, but a WXI. A corrective wave, like so, and I think that's what we did essentially. And now we're gonna come back down in a C wave, and it's gonna be like I illustrated earlier in the video, something like this, or we're gonna come back down in a wave 1, 2, 3, 4, and 5. But again, this doesn't even have to be a 1, 2, 3, 4, 5. It could just be a 1-2 setup. I don't know if I've this set up on my chart here, but essentially it would just be like a 1, right, and then a 2 wave, right, and then another 1-2. So I don't know why I had it yesterday, and I don't know why it's disappeared. But anyways, I think this is a 1-2, a 1-2, and now we could be coming down in our 3 wave. So I'll just draw 1, 2, 3, 4, 5. So I'll just adjust this for you guys. So I think the 1-2 is starting now, and we could be getting into a 3rd wave towards the downside. And again, just because we're going down to 4,000 doesn't mean the market's going to crash and everything, but we could definitely retest some significant support around 4,000 to 480 on the S&P. You can even go to 3,900 and you could still be bullish, right? You could still extend the wave 4 that low, right? The wave 4 here that we've bottomed out, it could extend lower, and we could still be bullish. So it's nice to have, it's good to have an idea of what is going on in the market, not to be permanently bearish, but to see what the charts are telling you. And right now, what the charts are telling me is that this is looking very, very, very bad at the moment. I don't see more upside like everyone is talking about. I'm seeing more downside coming in the weeks ahead. We have increasing red money flow. This pump here that we got, this 4.5% pump, was incredibly bullish all over the news. The bulls were cheering, laughing, screaming, pulling their hair out to buy because we're going to all-time highs, and we've already run out of steam, and now we're starting to roll over already. And the moving averages have rolled over already. So I'm expecting money flow to keep increasing in the red. Right now we have a tight momentum wave with a red dot that just printed out with the overnight, the overnight markets. The futures are showing the same thing here with a 17 and a -5, which is quite bearish. And then taking a look at the NASDAQ, we printed that red dot actually a couple of days ago on Tuesday, and now we are going to get some follow through most likely in the coming days. Russell 2000 is just in the toilet at the moment. The Russell really needs to hold the 169 level. If it breaks below that with like a daily close or a weekly confirmation below 169, I think that could really open the gates to go significantly lower. You're going to probably most likely go down to your 164, 165 target of the head and shoulders breakdown, right? Because you still have your head and shoulders here on the Russell 2000. And it very well could just be putting bearish consolidation. You're getting rejected at the 20-day moving average. And I think there's going to be too much pressure to hold up the small caps, and they're going to start to get into a free fall as yields are going higher right now. And again, this is putting more pressure on the markets, more pressure on the dollar to go higher. And the dollar did go higher today. Got a nice little update today. We'll have to see if the dollar can take out this high here, because I'm seeing a lot of people also on Twitter and the news. They're saying this is it. This was the top for the dollar, and this could be the top for the dollar, and they're looking at it as a ABC correction now. The dollar is going to go lower. But right now, when I look at market cipher and I look at the dollar is looking significantly bullish right now, right? There's actually a lot of green money flow. It's putting in some bullish consolidation near the highs. The weekly does have a topping signal, right? But looking at even some bigger time frames like the monthly is looking extremely bullish. The green money flow, you got a green dot confirmation on the monthly from last month. You have a -5 and a 16 on the dual band strength index, and this very well could extend higher, which would put more pressure on equities to go lower. Okay, and then we actually have the volatility index as well, which is already in the green money flow on the daily time frame. The weekly is actually about to cut back into the green, and again, that is not bullish because the volatility spiking up, that would mean an increase in fear, uncertainty, and that, you know, markets do not like uncertainty, and that would open the doors for more downside as well. And finally, I think we'll cover the Dow Jones here. The Dow Jones, we took a look at the Russell. So again, the Russell's looking really bad right now with another red dot here and a -5. And again, I remember everyone was freaking out over the Russell pumping yesterday. It was up like, at one point, it was up like 2.66%. And I mean, look at it today. From the previous close to the open to the close now, it's down 2.10%. So it just erased all of its gains, right, in one single day. And again, that's what happens when you dabble in small caps in a high interest rate environment. You're gonna get smoked. It's very dangerous, and if that matches your risk tolerance, by all means, go ahead. And then finally, looking in at the Dow Jones, Russell 2000, not the Russell 2000, the Dow Jones, right, the US 30, only 30 stocks in this index. So again, right now, looking very similar to what we're seeing on the S&P, the Nasdaq. It looks like we're topping out here and we're getting ready to roll over and get a continuation pattern towards the downside, which again, nobody is really expecting. Everyone is kind of focused in on that was the low and we're only going to go up from here, like this pattern is illustrating. There's only upside, buy. But what is left to buy, right? You look at all these tech stocks, you know, the Magnificent Seven, who are in the stratosphere. Like Apple, you know, it went to new highs at 198. You know, how much higher do you want it to go? You know how much, you know, capital you're going to need to push this thing up. And same thing for Microsoft, Google, Meta. You look at all the dark pool data of big institutions unloading at the highs here, and people are, you know, retail money is thinking of getting long. And the bears that have been smoked during this entire rally up, who are over leveraged, got pushed out and now are deciding to get long because, you know, if you can't beat them, join them, right? And we found support at the 200, but no one is really expecting more downside. So again, I'm expecting more downside. Do whatever you want, and we can see clearly that on the money flow, it is not bullish, and it looks like we've already had our relief rally, and I think we're going to see more downside in the coming days, weeks, and months. Eventually, I think we're going to find a nice little bottom and get a significant bounce, and we'll have to see if that bounce turns out to be a let me just pull up the chart here. I'm all over the place. Let me just show you guys. We'll have to see if this bounce becomes the bottom for a wave 4, or it's this bounce is just a wave 2, and then we're gonna come back way down in a wave 3 in a potential crash wave, or just a very very volatile wave towards the downside, and then we're gonna go to new lows, and at which point maybe we'll bottom out in the C wave around the COVID lows, or maybe we'll want to go that low. We'll take it, you know, day by day, week by week. I don't want to make any calls that low because we got a lot of support and got a lot of levels to take out if that happens. But overall, some people are thinking this is the count, which is a possibility. We'll have to see. I don't think so. I think this is the least likely probable scenario. So again, some people are thinking this is the wave 4. It just, you know, that was the bottom for the wave 4, or if it extends, it could stay bullish. But for me, my primary count would be to follow this pattern, and that we're going to come back down in a wave 3 now in a pretty significant way as well. We would have to take out these lows around 4,200 with significant volume and significant volatility. Maybe a big red candle would do it, but we would need a catalyst for this, right? But we have a lot of geopolitical conditions that would match that, you know, Palestine and Israel, all that stuff. And you can see that oil is, you know, pretty resilient here. Oil may be topping out here as well. Maybe oil is topping out. We are going to get a rally, right? But the thing is that oil could still technically extend higher in a wave 5, but it could also be just doing maybe a B wave top and then come back down in a C wave. But we'll just take it day by day because oil is very volatile, especially with so much happening around in the world. I wouldn't be short commodities right now. If anything, I would be long, and especially gold. Look at gold, that reaction. Excuse me, I burped a little bit there. That reaction off the lows here. Gold got a significant bounce up, and now we're back into resistance. So we'll have to see if gold comes back down, if the dollar rises too much. But even with the dollar rising, gold exploded higher due to the geopolitical conditions. And then silver, very similar situation. But silver is also, don't forget, a industrial metal. It is not just a precious metal. So if we fall into a recession, silver can have a negative impact towards the downside, and it can go lower, believe it or not. All right, I think that wraps it up for me. I don't really have much to add. Be safe out there trading. Don't over leverage yourself. We are getting into earnings seasons. Don't go too heavy into earnings, into stocks that have earnings. They can whip all over the place. So like the people who are shorting Netflix into earnings, like you're gonna get, if Netflix opens tomorrow with a gap up of 12%, you're gonna get smoked on your Netflix shorts. And if you're long if you're long Tesla into earnings, like you're not gonna be doing too well either if it opens 3 to 4% lower. Anyways, hopefully you guys enjoyed the video, and I'll talk to you guys later. Peace.